If you are a Canadian and you are 65, or you are getting close, there is a list of things in this country that you are allowed to get for free, or stop paying for completely, the moment you reach that age. And here is the part that should bother you. Most people will never claim even half of them. Not because they don't qualify. They do qualify. They simply never found out the benefit existed, or nobody ever told them which form to fill in. So the money just sits there, year after year, while they keep paying full price for things their neighbor 2 doors down stopped paying for the day they turned 65. I'm Peter Lawson. I spend my weeks reading the rules, the CRA bulletins, the Service Canada updates, the provincial programs, so that you don't have to. So let's start at the top of the list. Item 1, the age amount. Number 1 is a tax credit that exists for one reason only, because you turned 65. It is called the age amount. Here is how it works in plain English. When you file your taxes, the government lets you reduce the amount of income they can tax you on, simply because of your age. You don't have to buy anything, you don't have to spend anything, and you don't have to prove hardship. You just have to be 65 or older by the end of the tax year, and your income has to be below a certain ceiling. That last part is the catch that trips people up. The age amount is income tested. If your income is modest, you get the full credit. As your income climbs, the credit slowly shrinks, and above a higher threshold it disappears completely. Those thresholds move a little every year, which is exactly why I am not going to throw a hard number at you that will be out of date by next spring. What I want you to remember is the principle: if you are 65 or older and your income is low to moderate, this credit is yours, and it can quietly take hundreds of dollars off your tax bill. How do you claim it? If you file your taxes with software or through an accountant, it is usually applied automatically once the system knows your birth date. But usually is not always. If you file a paper return, or if you have never actually checked, go back and look at your last assessment. People who file simple returns by hand are the ones who miss this most often. And if you missed it in past years, you can ask the CRA to adjust returns going back several years, which means this one video could put money back in your pocket for taxes you already filed. Item 2, the pension income amount. Number 2 is the one almost nobody mentions, and it is sitting right next to the first one on the same tax form. It is called the pension income amount. The idea is simple. If you receive eligible pension income, the government lets you claim a credit on the first slice of it, and that slice comes off your taxes every single year. It is not a one-time thing. It is every year, for the rest of your life, as long as you have qualifying pension income. Now here is what people get wrong. They hear the word pension and they assume it only applies to people with a big company pension from 40 years at one job. That is not the whole picture. Depending on your age and your situation, income from things like a RRIF, or certain annuity payments, can count too. And this is the important bit: for many people, once you are 65, money you pull from your own registered retirement savings, converted the right way, can start to qualify. So a person who thinks, I don't have a pension, this isn't for me, may actually be able to turn their own savings into income that unlocks this credit. How do you claim it? Again, it goes on your tax return, and good tax software will catch it if the income is reported correctly. But the strategy piece, deciding when and how to turn your savings into income that qualifies, is something a lot of people simply never set up, so they go years without claiming a credit that was always available to them. Keep this one in your back pocket, because it connects directly to number 9, the most valuable item on this whole list. Item 3, the Gulf Standard Time/Hawaii Standard Time credit. Number 3 is real cash, paid straight into your bank account, 4 times a year, and you do not have to be a senior to get it, but a huge number of seniors qualify and never realize they're being paid, or never realize they should be. It is the Gulf Standard Time/Hawaii Standard Time credit. The government's logic is that lower and modest income Canadians end up paying a chunk of sales tax on everything they buy, so they send some of it back. It arrives quarterly. It is tax-free. And it is based entirely on your income and your family situation. Here is the single most important thing I can tell you about it, and it applies to almost everything on this list: you have to file your taxes to get it. Even if you made very little. Even if you made nothing at all. There are seniors living on a small fixed income who think, I don't owe any tax, so why bother filing, and by not filing, they accidentally switch off the HST credit, and several other benefits, without ever knowing it. The government decides what you get based on the return you file. No return, no payment. How do you claim it? You don't fill in a separate application. You simply file your tax return every year, on time, and the CRA calculates it automatically and starts the deposits. If you have not been filing because your income is low, that is the mistake to fix today. File this year, and ask about previous years too. Item 4, the Guaranteed Income Supplement number 4 is, for the people it applies to, life-changing. It is the Guaranteed Income Supplement, or GIS. GIS is a monthly, tax-free payment for seniors with low income who are already receiving old age security. The whole point of it is to make sure that older Canadians on a small income have a floor underneath them. And for someone living mostly on OAS and a little bit of CPP, GIS can add a meaningful amount to their income every single month. But here is the heartbreaking part, and it is the reason I put this video together. GIS is one of the most underclaimed benefits in the country. Thousands of seniors who qualify for it are not getting it. Sometimes it's because they never applied. Sometimes it's because they stopped filing taxes, so the government couldn't recalculate it. Sometimes they got it once, missed a tax filing, and it quietly switched off. How do you claim it? When you apply for old age security, you can apply for GIS at the same time. If you are already on OAS but not getting GIS, you can still apply, contact Service Canada directly. And then, this is critical, file your taxes every year, on time, for the rest of your life, because GIS is recalculated every July based on the income you reported. If your income is low, this is very possibly the single most important phone call you will make this year. Do not assume you don't qualify. Let them tell you. Item 5, the Canadian Dental Care Plan. Number 5 is brand new compared to everything else on this list, and it covers something seniors have been quietly going without for years, their teeth. It is the Canadian Dental Care Plan. For a long time, dental care was the great gap in our system. You could see a doctor for free, but a cracked tooth or a set of dentures could cost you thousands out of pocket, so a lot of seniors simply stopped going. The Canadian Dental Care Plan was created to fix exactly that, helping cover the cost of dental care for eligible Canadians who don't have private dental insurance, with the amount of help based on your household income. So if you have been putting off the dentist because of the cost, this is the one I want you to act on this week. We are talking about checkups, cleanings, fillings, dentures, the everyday care that keeps you healthy and keeps you eating properly. How do you claim it? You apply through the federal program, and eligibility depends on a few things: that you don't have access to private dental insurance, that your household income is under the ceiling, and that you have filed your taxes. There's that theme again. Once you're approved, you're given coverage details to bring to a participating dentist. The rules and the rollout have been expanding, so even if you looked into this a while ago and weren't eligible then, it is absolutely worth checking again now. Item 6, your Provincial Drug Plan number 6 is the one that changes the most depending on where you live, but it can save you more in a year than almost anything else on this list, so do not skip it just because I have to keep it general. It is your Provincial Drug Plan. Here is the thing most people don't realize: turning 65 often unlocks prescription drug coverage that simply was not available to you the day before your birthday. Several provinces have a seniors drug program that kicks in at 65, where the province covers most of the cost of your prescription medications and you pay only a small amount, sometimes just a few dollars per prescription. If you take medication regularly, for blood pressure, for cholesterol, for your heart, for diabetes, this is the difference between paying full price at the counter and paying a fraction of it. Over a year, for someone on several medications, that is not pocket change. That is real money, every single month. How do you claim it? This is where you have to look at your own province, because every province runs its plan differently, different names, different enrollment, different small copays. Some enroll you automatically when you turn 65. Some require you to sign up. So your action step is simple: search your province's name plus Seniors Drug Plan, or call your provincial health line, and ask the direct question: I'm 65, am I now covered, and is there anything I need to do to activate it? Do not assume it's automatic. Confirm it. Item 7, Property Tax Relief for Seniors number 7 is for the homeowners watching, and it is one of the best kept secrets in the country, because the people who run it are not exactly advertising it. It is property tax relief for seniors. Many provinces, and many cities, offer programs that either reduce your property tax, give you a grant or rebate toward it, or let you defer it, meaning you legally postpone paying it. With a deferral program, the province essentially lets eligible senior homeowners put off paying property tax, often at a very low interest rate, and it gets settled later, usually when the home is eventually sold. That can free up a significant amount of cash flow every single year for a senior who is house rich but cash tight. I want to be careful and honest here, because this varies enormously by province and even by municipality. Some places give a straight grant. Some give a deferral. Some give a rebate aimed at lower-income seniors. The details matter, and a deferral in particular is something you want to understand fully before you choose it. How do you claim it? Search your province's name plus property tax deferral or seniors property tax grant, or call your municipal tax office and ask, what property tax programs are available for seniors my age? The reason almost nobody claims these is that you usually have to apply, and often you have to reapply every year. It is not automatic. But for the right person, it can be one of the biggest single savings on this entire list. Item 8, Transit, Recreation, and Everyday Discounts. Number 8 is the one people roll their eyes at, until they add it up over a year. It is the world of senior transit, recreation, and everyday discounts. Here is why I refuse to skip it. On its own, a discounted bus pass or a few dollars off at the pharmacy doesn't sound like much. But these stack. Many cities offer seniors deeply discounted or even free public transit. Lots of recreation centers, swimming pools, and fitness programs have a seniors rate that is a fraction of the standard price. National and provincial parks often have a senior discount or a reduced annual pass. And a long list of pharmacies, retailers, and grocery stores run a regular seniors discount day that, frankly, most seniors forget to use. None of these will change your life by themselves. But a person who actually uses them, the transit, the recreation pass, the discount days, can easily keep hundreds of dollars in their pocket over a year, money that otherwise just evaporates a few dollars at a time. How do you claim it? 2 simple habits. First, whenever you pay for something, a ticket, a pass, a membership, a purchase, get in the habit of asking one question: is there a senior rate? You will be amazed how often the answer is yes and they simply never offered it. Second, check your city's website for a seniors page. Most have one, listing transit and recreation programs in one place. It costs you nothing to ask, and the people who ask are the ones who keep the money. Item 9, the one worth the most, pension income splitting. And now we are at number 9, the one I told you to stay for. The one that is worth more to you over time than almost everything else on this list combined. It is called pension income splitting, and here is why it is so powerful. In Canada, the more income one person has, the higher the tax rate on the top part of it. So picture a couple where one spouse has most of the retirement income and the other has very little. The higher income spouse gets taxed harder, while the lower income spouse has all this unused room down at the low tax rates. Pension income splitting lets an eligible couple move some of the pension income, on paper, from the higher income spouse to the lower income spouse, so more of your money is taxed at the lower rate instead of the higher one. Think about what that means. It can lower your combined tax bill. It can help the higher income spouse keep more of their old age security, because OAS gets clawed back once your income passes a certain point. And it can even open the door to other credits that are based on individual income. For the right couple, this is not a few dollars. This can be a meaningful amount every single year, and because you can do it year after year after year, over a long retirement it adds up to far more than any single item we have talked about today. That is exactly why it is the one people leave on the table the most. It takes a deliberate decision at tax time, and if nobody ever tells you to make that choice, you simply never make it. How do you claim it? It is an election you and your spouse make when you file your taxes. You decide together how much eligible pension income to split. Good tax software can even calculate the best amount for you, and a tax preparer will do it as a matter of course if they know your full picture. The mistake is doing your returns completely separately, in isolation, and never looking at the two of you together. So if you are part of a couple, this is the conversation to have before next tax season. Are we splitting our pension income, and are we splitting the right amount? So there is your list. The age amount. The pension income amount. The HST credit. The guaranteed income supplement. The Canadian dental care plan. Your provincial drug plan. Property tax relief. Senior transit and discounts. And the big one, pension income splitting. Now, before you go, let me leave you with the single most important thread running through this entire list, because if you remember only one thing, make it this one. File your taxes. Every year. On time. Even if your income is low. Even if you own nothing. So many of these benefits, the HST credit, the guaranteed income supplement, the dental plan, your tax credits, are switched on or off based on the return you file. The government is not going to chase you down to give you money. The return is the key that unlocks the door. No return, no key. And remember, I have kept this general on purpose, because the exact amounts in the provincial programs change, and your own situation is yours alone. So treat this as your checklist, not as personal financial advice, and confirm the details with the CRA, with Service Canada, or with your province before you act. If even one item on this list put money back in your pocket, do me one small favor. Subscribe, so the next time a rule changes or a new benefit opens up, you hear about it from me first, in plain English, before it costs you. And share this with a senior you love, because the person who most needs to hear it is almost always the one who never finds it on their own. I'm Peter Lawson. I'll see you in the next one.